Are you tired of hearing about people making money in Forex? But every time you try to learn, it just sounds confusing. What if I told you that Forex trading doesn't have to be complicated? In this video, I'm going to break down the core basis of Forex trading, orders, trading section, margin, equity, and how to avoid the dreaded margin call. By the end of this video, you have the knowledge you need to take your first confident step into the world of Forex trading. Make sure you hit the like button, subscribe, and let me know in the comment section if you are completely new or you're already trading. Let's dive in. Let's start with Forex orders. A Forex order is simply how you tell your broker what you want to do in the market. Do you want to buy or do you want to sell? That is what orders are for. The most common type is the market order. This is when you buy or sell immediately at the current price. Let's say Euro USD is trading at 1.1000 at the current price. You place the market buy. That is called a market order. Then we have the next one, which is pending orders. These are for when you want to enter the market only if the price reaches a certain level. We have four basic types of pending orders. We have the buy limit, we have the sell limit, buy stop, sell stop. Each of these is used depending on whether you think the price will reverse or continue once it hits a certain level. Before we continue, click on the pop-out video to watch the basis of Forex, understanding what Forex means, the type of Forex, and how to trade Forex before you start watching this video in order to get more info and understand better. For the buy limit, you wait for price to retrace down. You set your buy limit. If it hits the buy limit, it goes up. Then for the sell limit, it is set above price so that if price gets to that certain level, it will sell. Then for the buy stop, it is placed if price is moving in a particular direction. It is placed above the price to continue the buys. Then sell stop is placed below price if price is moving down to continue the sales. If you don't understand, you can drop your question in the comment section. Let's continue. So why do we use market orders? Market orders can be used for speed, like speed entry. You are not waiting for price to get to a certain level, but before you enter, market order is just a direct execution of the market. Sometimes if you want to get into in a trade or get out of a trade immediately, you use market order. For example, if there's a breaking news and the market is spiking, you may not have time to set a pending order. You need to act now, and to act now, you need to set a market order. If you go to your MT5, you will see different way where you can set your orders. You see pending and you see market order. Then we have trailing stop. You can use trailing stop to stop you from losing money. But you need to be very careful when you are using market order because of slippage. There are some times when news events, when there's some fundamental news happening in the market, there might be slippage and it might cause excess loss. So you need to be very careful during all those times. So let's continue. Now let's talk about Forex trading sections. The Forex market is open 24 hours a day, 5 days a week, but that doesn't mean every hour is equal. There are 4 main trading sections in the market. We have the Sydney section, the Tokyo section, the London section, and the New York section. Each section has different characteristics. For example, the London section is known for high volatility. The New York section is known for huge liquidity. Then the Tokyo section is usually quarter but greater for JPY pairs and AUD pairs. JPY pairs means yen pairs, which is Japanese yen, and AUD means Aussie pairs, which is Australian dollar pairs. The best time to trade are during section overlaps, especially London, New York overlap. That's when the market is more active. When should you trade each section? To trade each section depends on the pairs you are trading. Like for the Asian section, the best pair to trade during Asian section is AUD pairs, NZD pairs, and JPY pairs. AUD is Aussie, NZD is New Zealand dollar, and JPY is Japanese yen. Then at the London section, the best pair to trade is Euro pairs and GBP pairs, which is European pairs and Britain pairs. Then New York section, the perfect pairs to trade during New York section is USD pair like commodity, SAUSD, USD-JPY, USD CAD, Euro USD, and so on. Volatilities peak when London and New York section are open together, which is often the best time for day traders. Which section do you plan to trade? Let me know in the comment section. Now, let's talk about margin and equity. This is where most beginners get confused. Margin is the amount of money you need to open a trade. Think of it as a security deposit. Then equity is the total balance plus or minus your open trade profit or loss. Example, if you have 1,000 and an open trade that is $50 in profit, your equity is now $1,050. Forex allows you to trade large position with a small margin using leverage. If your losses grow too big, you can face a margin call. This means your broker wants you that your account doesn't have enough equity to support your open trades. If you don't act, you hit a stop out level where the broker automatically closes your trades to protect itself. Mark the word stop out level. To avoid this, never risk more than 1 to 2% of your actual capital. Always use stop loss. Keep your leverage under control. Let's recap quickly. We talked about Forex orders, which we mentioned market orders and pending orders. We talked about trading section, the best time and currencies to trade during the time. We talked about margin and equity, margin call and stop out. Knowledge is the best defense in trading. The more you understand this basis, the more confident you are placing trade. If you learned something new, smash the like button, subscribe, and drop your question below. I'll reply to every comment. Thank you for watching. Check out my next video where I will teach you how to read Forex chart like a pro and we'll do live analysis together. Thank you very much.